Oh, good morning, everybody. It's Paul Burke from ID Accounting and Wealth Solutions. It is the 17th of March, and with a nice big green screen, I think the first thing to say is Happy St. Pat's Day to all of you out there. But secondly, I think it's important to talk about the COVID-19 coronavirus update and what it's doing to share markets, in particular what happened last night on Wall Street. So we thought we'd just reach out to the client base and have a quick chat about what's happening right now and try to restore a little bit of calm to let you know that everything will be okay. Central banks and government intervention. The first thing to look at, and you may have heard me talk about this before, is that when we go back to 2008 and 2009, we saw for the first time in history that central banks came together and they did everything they can in their power to restore calm and normality within the economy and within markets. We're seeing the same thing again. Last Friday, the Reserve Bank injected $7 billion into the economy here in Australia. The Federal Reserve launched a $700 billion quantitative easing program in America on Sunday. Also in America, the Federal Reserve reduced rates to near zero. We're likely to also see the Australian Reserve Bank implement emergency rate cuts this week. It's touted that we may see it happen this Thursday. As you can see in some of the headlines here that I have, the Reserve Bank is to lower the cash rate by 0.25%, according to Westpac. The reason why I'm showing this slide is to let you know that we do have governments and central banks on our side. They don't want to just let the market just run its course. They're doing everything they can to combat this and combat what what is actually happening in the world right now. Further proposed stimulus plans are being rolled out by the Australian Prime Minister. This includes small business concessions and individual lump sum payments. These are also designed to try and keep the economy ticking over. Scott Morrison has come out with further comments this morning and will come out with further comments today with Treasury to look at other stimulus plans that they can inject into the economy right now here in Australia, very similar to what's happening in America. Once again, the theme is you do have governments and central banks on your side. What does it mean when it comes to portfolio management? Well, here at the team at iDoors, we continue to work with our investment partners on a daily basis right now to get through this volatility. Our portfolios remain defensive and have been for many months now. As many of you know from being in the office in the last 12 months or so, prior to Christmas, we took a fairly defensive position. Not that we predicted what was going to happen right now, but our portfolios remained defensive since prior to Christmas by holding excess cash and other defensive measures within the portfolio. We have three types of clients. We have retirees, pre-retirees, and accumulators. I'll start off with the accumulators. The accumulator clients who are a lot younger in the client base, they've got time on their side. They do hold more growth assets than the retirees and pre-retirees, and you're feeling the pinch a little bit. You're not falling as drastically as the 30% falls in the share market, but you are feeling the pinch. But the key is that you do have time on your side. For those retirees and pre-retirees, one thing I want to talk about here on the screen is the diversified nature of your portfolio. And also on the screen here, what we have is some back testing. Our investment partners have applied up to 40 different scenarios on the portfolios, and this has been happening for a good 20 years now. What they do is they back test history and look at what happens in history with things like oil shock prices, financial collapses, and have a look at number 25, a global pandemic. So a global pandemic has actually been back tested within the portfolios prior to this happening to see exactly what impact it has on the portfolios. Now, why is this important? It's important because it allows the portfolio managers to react accordingly and understand and have a plan if this does happen as to what they should do. This doesn't mean that they just change things overnight. Some cases it may mean just to stay calm and not panic and get through these periods, which is essentially what's happening right now, because a lot of the fundamentals have gone out the window when it comes to valuations on stocks right now, and we know that Corona is causing a lot of panic. Remember, the long-term approach is what we need to take here. Corona will be contained eventually. Markets will settle down and normality will be restored. The key to remember is that in the short term, markets are controlled by investor sentiment and noise. But in the longer term, markets are controlled by economic indicators and business growth. Have a look at this chart I've just taken a snippet of here. You can see here the swine flu pandemic of June 2009. We can see the drops and the rise and fall and so forth. The reason why I just took this snippet is to say that pandemics do come and go. Markets will react to it in the short term, but they will restore and go back to normality. We will see this come to an end at some stage. We don't know exactly when that is. But as I mentioned earlier, you do have governments and central banks on your side. And thirdly, you have us with the portfolio managers on your side as well, controlling the portfolios with back testing, scenario testing, and ensuring that the asset allocations remain strong for you. So the key is hang in there, let's not panic, and let's get through this period together. We are always here to talk to you on the phones or come in and speak to us in the office at any time. We'll talk to you again very soon. Thanks for listening.